What is going on? Just give me a second. I'm sending out invites and we'll get going. We're just gonna hang out. I'm gonna check out some sites, look at different tickers, and just prepare for the week. What is going on? Just give me 1 second. I'm sending out invites and we'll get going. We're just gonna hang out, look at charts, get on the internet, look up different symbols, and just prepare for the week. See what's going on. I was looking at a couple tickers just a few minutes ago, and a few caught my eye. Thought I'd share them with everybody. I'll share one more and I'll get going. Alright, let's get going. Feel free to ask any questions if you want, or any stocks you want me to go over. Just comment it and I'll be more than happy to go over it for you. So I was recently just watching a trading DVD. It was Tim Sykes, Tim Tactics, and he had a website he was going over in one of them, and it is called stockreads.com. I'll bring it over here. So stockreads.com is pretty cool. You get to see which stocks promoters are pumping, where a lot of the newsletters are going out. And there's that one, and there was one more. It was I just literally had it up. It was like Stock Station or something. But I was looking at a couple. Let me pull up here. I was just looking at Nike because they just reported, that big deal with Kaepernick, and then Nike goes off and releases that their sales increased 31%. And if you look at the daily on this, let's see. I don't trade big cap stocks, but it's just interesting to look at. This is the daily chart of Nike. I put a resistance line here and a support line here, and it was in this range, and then it broke out of this range and exploded up. And if you see here, lately it's been likened to bounce off this blue line here, and this blue line is the 50-day moving average, and it bounces here, 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 and it looks like it's bouncing again here. So I would be looking for this to bounce off of this and start trending back up. But it's always good to wait until it actually starts showing, like it is right now, that it's starting to bounce and trend up off of that. But recently the market, all of last week, has just been red. All last week. I only took one trade last week, and it was a loss for $183. That was on Wednesday. And after that, I just didn't see any opportunity that I felt comfortable with. Let's see. Let's go over the overall market. If you guys have any questions, feel free to leave them in the chat. Anything you'd want me to go over, I'll be more than happy to give my opinion on it. So this is the market strength. This is the SPY daily and the NASDAQ daily. And if you go back the previous 5 days right here, you can see every single day was down red. So we're last week, my opinion, we just witnessed a pullback. That's all. I'm excited to see what this next week brings because we're looking at a good opportunity for this to rebound and start moving back up. It could keep falling. That's another thing too. It could keep falling down and keep pulling back down to the 50-day moving average here and then start to bounce up. But if you look at the NASDAQ pulled back down to the 50 and you got a doji right there, right at the 50-day moving average. And if you put a support on here, let's see, I'll put one going right here. And it's pretty much matching up with this trend support right here. But then you got a resistance right here. Maybe just a little bit higher. So you got a wedge up that it's starting to form. So it's just interesting to look at. When I'm in the market and trading, I always have the SPY up to see how the overall market is doing, because 3 out of the 4 stocks follow the overall market. And I'm not going to want to trade when the overall market is down. That's just, you're fighting the market. You're going against the market. That's why every morning when I wake up, I look at the futures. Are the futures up or are the futures down? And you got to look at it as when the futures are up, it's a bright sunny day. And stocks are breaking out, making new highs. 3 out of 4 stocks are breaking out. Now, when the market's red and down, it's a rainy day. And a lot of stocks are, declining, making new lows. And I'm not going to want to trade really because the overall market's down. 3 out of 4 stocks follow the overall market. We'll go back to trade here. A stock that's been on my radar that I just been keeping an eye on was NEWA. Now this is the past history on this. Look at that huge drop from $30 down to $8.64. And this is on the 65-minute chart. If I go to the 5-minute chart, and it's always good to look at stocks in different time frames. The more time frames, the better, because you start to see a bigger picture and you start to zoom in on those time frames and start to align what's going on. Now here on the 5-minute, after this huge drop right here, you see it's still declining here if I zoom in. So if I put a support line right here, and then I'm going to draw a line connecting these highs, starting from here, going all the way down. Computer's acting a little slow. And that's just basic technical analysis. So I'd be waiting now for that to break out to the upside to want to get in on this, if I wanted to get in on this. Now if you pull up the daily chart here, look at this daily chart. It's just crazy. Look at all those huge drops. This is a straight up pump and dump chart right here. You could see it likes to trend up, and then one big red day gives it all back. And again, trends up, a few red candles gives it back. Trends up, huge red day right there. You start to see a pattern. This is just a pump and dump stock. Someone or people are taking advantage of this stock or ticker, and they're just riding it up and then just dumping their shares. You see it 1, 2, 3, 4, 5, 6, 7 times. Let's look at the weekly. Yeah, look at that weekly. And then let's look at the monthly. That ain't really nothing. I wanted to look at Funko real quick. So this is Funko on the daily. Where do you look at futures, and what does a day you wouldn't trade look like? So the futures, if you go to yahoofinance.com, it'll tell you the futures every morning. So let me pull up the internet here. Let's go to Yahoo Finance. If you go to Yahoo Finance every single morning, it'll tell you right here what the futures are. The futures is the SPY, the NASDAQ, the S&P 500, the Russell 2000. If they're gapping up or gapping down, that's the futures. And every morning before the market opens, as soon as I fire up my computer, I'm going to Yahoo Finance and I'm looking to see how the overall market is looking before the market opens. Is the market gapping up or is it gapping down? That's the futures. And let me exit out of this. You could do it on this, on Yahoo Finance, and you can also do it on FinViz. FinViz.com. It'll tell you right there at the top. And then you got a big, huge heat board right here that gives you a picture too of how the overall market is looking. And how I would trade. So your other question, and what does a day you wouldn't trade look like? So a day I wouldn't trade, it's all pre-market. I'll look at pre-market, I'll look at the scanners. If stocks are gapping up and holding, and I'll look at chart history, I'll look at the daily chart. Is there any upward resistance? Is there any moving averages that are above it? A great trade for me is a stock that's gapping up, no upwards resistance, it's above the moving averages, it's a low float, it's got volume pre-market, and it's ready to go. It's starting to set itself up pre-market. It's got a great press release. I like to trade stocks that have a catalyst too. That way, I'm not trading a low float pump that could get halted by the SEC at any moment. That's a risk you got to consider when trading these stocks. A low float stock like CALI, C-A-L-I, that stock one day went from pretty much $1.50 to $5. I think I saved a picture of it. Let me see. I think I put it under Epic Stocks. Yep, CALI Pump and Dump. T12 halt. Right here. So this is CALI. One day it didn't have no news. And if you look in the news, the past previous news history on it, it had all kinds of news releases that it was like avoiding the SEC and not filing their SEC filings. And they kept getting notice after notice after notice. And then this day, it's a low float, had no news. It spiked from 240 up to 5 and then went down. And then the next day, the SEC put a T12 halt on it. And it was halted for 2 weeks. And then when it reopened, it got removed from the NASDAQ listings. And now it's on the OTC market, I believe. So that's why you got to try to protect yourself when trading to play stocks with a catalyst. You need something to back it up. T12 halts don't happen all the time, but they happen. I've seen it happen on CALI, LFIN, RTMB. The more time you spend in the market, that's why I say it's important to be here every day and observe the market, because you'll remember stuff that happens. And then when stuff happens in the future, you'll have flashbacks and you'll remember of previous stuff that happens. You know, the market is a cycle. A lot of stuff happens over and over and over and over again. Patterns, news, stocks breaking out, pump and dumps. Yeah, it is terrible. But hopefully that answered your question. Back to this. This is Funko, the toys. And I just thought this was an interesting chart. I went to, where was it? I'm going to pull that back up to get it back up, that site Tim Sykes was talking about. But I found this Funko chart, and this opened last year in 2017 in November. All right, and it went up, and then it came down here to $6. And then all this year, it just has a good ramp up going from $6, and it's hitting a high today of almost $30. So this is just a great long-term investment that the stock would have had. You know, but who would have known from down here, you know, it was going to make a move like this. That's why it's always good every weekend to just hop on your computer and just go to these websites and just look at charts. You know, look at charts, look at statistics, look at stocks that are making new 52-week highs, new 52-week lows. I'm going to find that site again. I'm going to pull it up right now. So hold on. So that would be in... I recently just got a lot of new DVDs as well. All these DVDs right here I just recently got. Answer Stock, read SEC filings, Fundamentals, Part Duh, Tim Decators, Tim Fundamentals, Tim Raw, Tim Tactics. So I have a lot of DVDs I gotta watch. And I was just watching this one.
The ones that I think there's more.
I learned that route was giving me a lot better executions for whatever reason.
No, it was Tim Tactics. That's what it was.
And we are back. Get the draft. I'm watching for extreme moves. You know, I mean, this
Station.
Is,
That's
it's just
the name
too
of
much.
It.
You do that.
So the name of that site is, just give me 1 second. I got a lot of stuff open. Clear Station. Right here. It's at the... This was at the... Alright, so it's the Nasdaq... This is the Nasdaq.com. I'm going to write that down real quick. Clear Station, so I don't forget. And if you're looking for a good trading DVD to purchase right now, I recommend... It is Tandem Trades. Where is it? Tandem Trader, DVDs 1 and 2. Great, great DVDs. Very good. Investors Underground. If you're not even subscribed to Investor Underground on YouTube, subscribe to them. They got a lot of great content, and they are great traders. Also follow them on Twitter too. It's always good to follow great traders on Twitter because they always be posting stuff throughout the day, and then just get notifications through them. So I get notifications from Mad Ass Trader, Investors Underground, I was getting notifications from Tim Sykes, but the last year he just pretty much went off board. He's all about promoting. He's a good businessman. But I came to this the Nasdaq.com after trying to find ClearStation, and I went to markets, and I went to stocks. Then you can go to most active, unusual volume, 52-week high-low, upcoming splits, new SEC filings, IPOs, earnings, all kinds of stuff. And every weekend, just go through and look at all this stuff. And this is how I found Funko. This is the one making the new 52-week highs. And it's right there. So when I'm scrolling down and looking through this, I'm looking at the price. I want it to be in my price range. And my price range for stocks is from 25 cents to $20. So like BCAC, I see this one right here. It's on the new high list. Let's look it up. BCAC. This is the daily chart or the intraday chart. That's not looking good. So let's pull up the daily chart, see what the bigger picture is. That's not looking good at all. That's a piece of crap. I don't want nothing to do with that. There was Funko. And then I just looked up Nike as well, everything that's been going on with Nike. And a lot of things too, when you're subscribed to like Yahoo Finance, Market Watch, and stuff like that, and you hear something like Nike recently about the drama with Kaepernick, and then Nike released their earnings are up 31%. A lot of people just overlook that stuff, and if you actually pay attention and just look at that kind of stuff, that's opportunity right there. Seeing news release and press releases like that is going to attract volume. And sometimes volume with news moves slow, or sometimes it moves fast. It can take time. How they say it, word of mouth takes time. So let's go back. I want to try to find that ClearStation. Oh, this looks like it's been retired. Let's see. Yeah, it's been retired. That's alright though. Because we still got FinViz. What I like about FinViz is they have the top gainers here, new highs, unusual volume, top losers, and then they also have these trend line, like the signal that I like this part right here. So you have stocks that are in a trend line support, trend line resistance, wedges, triangle ascending, channel up, double tops, and I'll just go through and highlight over them to see if any of them catch my eye and if they're in my price range. That one looks pretty good, but it's just a little bit too expensive for me. I'd stay, that's like too perfect, but and then we got trend line resistance. And this is how you simply just find stocks to create a watch list. Just doing stuff like this. And you don't have to trade or keep track of stocks that everybody else is keeping an eye on. You know, as long as it has volume, you're going to do all right. Don't worry about what other people are doing or what they're looking at. You know, do whatever makes you feel comfortable and whatever catches your eye. You know, the whole point of being a trader is being self-sufficient. You don't want to be a sheep and follow alerts or follow other people. And it took me a long time to realize that. And another alert thing, so recently I made a couple upgrades to the Trading Learning 101 YouTube channel. If you go on the playlist, I added a few playlists. Check them out. There's a favorites playlist of really good informational videos, and then I also added Trader Checklist playlist by Tim Sykes. That's a great DVD for learning how to make a watch list and learning what stocks to pick and keep an eye on. It is long, but you got to put the time in. You really do. And then another playlist is the best of Timothy Sykes. You know, now Timothy Sykes I really don't pay attention to, like I said, but he's been on YouTube for 9-10 years. His older stuff from 5+ years ago is gold. Like, he goes in depth, he does trade reviews, goes over, he talks and breaks down stocks. It's just really great stuff. And when I get done with this, just go over there and check it out. I'm not really seeing too many that are in my price range though with these. That's why I also got trade ideas as well. How's everybody's weekend going so far? Well, I hope. Getting a lot of studying done. The weekends is the best time to capitalize on studying. You got to put a lot of time into studying. So EGI, multi-bottom. Let's look at that. Yeah, I'm seeing it has a multi-bottom here at around 33-35 cents. But it's got up resistance here. The blue line, the 50-day, and the red line, 200-day. And those are going to act as resistance walls. And you can see right here, it came right up to it and it stopped right there at the 50-day. So this has a range of 5 cents. I'm not interested. Also really quick too, looking at what was it? GEMP, I think. Yeah, looking at these in zoomed out time frames helps a lot. So this is GEMP. This is the 5-minute, and if you zoom out on it, what do you see? Can anybody comment on what you see? Come on, guys. What pattern do you see? I got 4 people in here watching. No one can tell me what the pattern they see on this. What I see here is the head and shoulders right here. This is on the 5-minute, and this is the benefits of looking at multi-time frames. You got a shoulder right here, and then you got your head, and then you got another shoulder right here. And as you can see, now it's trending down, but I'm seeing support here at $2. So that is the final line right there. So I would see if this holds $2 and starts trending back up to 230 here, where it's going to have resistance. You can clearly see the resistance. You got it right here and right here. Those are perfect shoulders. And the more perfect the head and shoulders is, the more powerful the pattern. That's a beautiful head and shoulders. That's why I say it's important to, know your patterns and study your patterns. A great book that I just got is called, you can get it on Amazon for 25 bucks. And it is called The Candlestick Bible by Oleg Pozhidaev. Oleg Pozhidaev. I can't even pronounce that name, but this looks like a pretty good book, and it breaks down candlesticks, candlestick patterns, chart patterns. I just picked it up and thought I'd give it a read. I'll read the back for you guys. The Candlestick Bible is the second book in the Intelligent Trader series by Oleg. The Candlestick Bible goes through dozens of different chart patterns and teaches traders what to look for, how to analyze them, and how to place profitable trades using these patterns. The book consists of 4 main parts, which are trendline patterns, multi-candle patterns, signal candle patterns, and useful indicators. The easy-to-read format and explanations will allow traders to become proficient in reading price charts and be able to tell where price action is going next at a moment's notice. This book is a must-read for those who wish to understand candlestick patterns and the underlying principles behind the patterns, which allow for profitable trades. Towards the end, we discuss useful indicators that readers can add to their own trading toolbox. The indicators covered pair extremely well with candlestick technical analysis strategies. And I'll write this book here in the chat, so if anybody's interested. And there you go. So I got that on Amazon for 25 bucks. Took 3 days to get to me. And I literally just got it today, so I'm excited to check it out. Even if you read something or watch something and learned it, it's always good to go back and refresh your memory on stuff. So why made the biggest difference in your trading? What made the biggest difference in my trading was trading's a lot to take in. You're going to learn a lot of stuff. What made the biggest difference in my trading is starting to put everything together. Like, when you first start off and you're learning everything, it's like a big puzzle has been thrown at you, and you don't know where to put the pieces, or it's going to take you a while to put the pieces together. And that's why you have to be consistent and go at this every single day And then over time, after you put your screen time in and just put your time in, a lot of stuff's just going to start making sense. That's the best way I can say it. When I first started trading, I wasn't looking at the daily chart, the 5-minute chart, 15-minute chart. I was only looking at the 1-minute chart. That's it. When I first started trading, and I was only looking back at maybe 5 days. So I had no clue what I was doing. So the more you learn and start to put more things together, a lot of things are just going to start clicking, like left and right. And when you get 9 months to a year in, just after that, everything you've learned, it's like even going back, like stuff when I first started learning and then stuff I started learning 6 months later, it's like a light bulb goes off in your head and it's like, oh, wow, that's what that means. Okay. Because when I first started, I was learning about candlesticks, and I learned what dojis and hammers are, engulfing patterns, and I was literally thinking traders would sit and watch the 1-minute chart and just trade off of what candles were telling them. I was, you got to put your time in and invest your time in to see the bigger picture. And then I started learning, okay, compare the 1-minute chart with the daily chart, which is this. Compare to look for resistance lines and support, and then start using moving averages like the 50-day, the 200-day to guide you for support and resistance. And then also psychology. You got to think of what other traders are looking at. Volume. There's just so much to learn, and you got to just piece it all together one by one. And it just takes time, lots of time. At first, I was cheap. I was saying, I don't need a mentor. I don't need to buy these trading DVDs that cost $500, $1,000. But I'll just use what's free. I'll go on the internet and look at free stuff, and I'll go on YouTube and look at free stuff. And you can do it, but it's going to be, like I said, referencing back to a puzzle, a big puzzle just being thrown at you, and you got to piece it all together. You literally need a mentor to guide you and show you what to look for and how to piece the puzzle together. Good explanation. I have a year at this. And I'm all over the place learning. I'm reading so many books, watching so many videos. I'm in so many chat rooms and still consistently losing every trade. It can get frustrating, it really can. But your losers can be your biggest learners. Are you keeping track of all your trades? Every time you take a trade, take a picture of that daily chart and take a picture of that intraday chart. And those will start to add up. And every weekend, go back and look at what you did. And you will clearly start to see where you're making your mistakes and where you're doing good. If you're on a desktop, even better, you can record your trades. Every day the market opens, start recording. Record the first 30 minutes or the first hour, Monday, Tuesday, Wednesday, Thursday, Friday. And then over the weekend, just go back and watch those and compare the price action on the candles to the level 2. And just start doing it over and over and over and over again, and you will get better. And that's the point too, where they say 90% of traders fail. You want to know why? Because they don't put the work in on the weekends. They don't put the work in on the weekdays. They just expect things handed to them. You really have to put the time in and dedicate yourself to this to be good. The more time, you will get better at this. And I'm sure you've been doing this for a year. You can honestly say you're better today than you were 2 months ago, 6 months ago, 1 year ago. You know, imagine how good you're going to be 2 months from now, a year from now. You're only going to get better. And the more you keep at it, the better you'll get. Trust me. I've gotten frustrated too at the market. Very frustrated to where I wanted to quit. It was always in the back of my mind. Am I going to let my family down? Am I ever going to get this? Am I ever going to be good? Am I wasting my time? Yeah, it's crossed my mind plenty of times when I first started. I've only been doing this for a year and a half, and I've come a long way. And I can tell you right now, it is possible to get good at this. You just have to keep doing it and doing it and doing it. If you watch a lot of, I like watching Tim Sykes' videos because he's very inspirational and he repeats himself a lot. And he's repeating himself a lot for a reason. It's repetition. Doing the same thing every single day. You do the same thing every single day, you're gonna become a master at it. And you're gonna get faster, you're gonna get better, and then you're gonna start branching off and learning other strategies and other whatnots. There's a lot of stuff to learn in the market and a lot of it's crazy. But once you start aligning everything, it makes total sense. I'll give you a tip right now. When you're looking at charts, always look at charts in multiple time frames, the 1 minute, the 3 minute, the 5 minute, the 15 minute, and do the 65 minute. Don't do the 60 minute, do the 65 minute. Because if you look at the market's open from 9:30 to 4 o'clock Eastern time. Now, if you divide 60 minutes into that market open, you're not going to get the right enough data for each candle. You're going to be short. But if you change it to 65 minutes, you'll get the exact candles for the market day. So look at multiple time frames, 1 minute, 3 minute, 5 minute, 15 minute, 65 minute, the daily, the weekly, and the monthly. Start looking at the bigger picture first, which is the daily. And if it has a big history, look at the monthly or the weekly. See where the moving averages are for resistance. And then go back to the daily and then start working down. Look at the 65 minute. All right, so we got GEMP here. This is the 65 minute, okay? I could see all these big drops. I got a big gap up here. I got a drop here and a drop here. This chart's looking ugly. So, these gaps right here, stocks love filling gaps. So I'm going to put a resistance line right there. And when this stock starts to move back up, that's going to act as a resistance line. Same thing with here too. So I've seen recently, man, you can add a lot to this. So I got a high here, and I could draw a line down, just like that. And then I can also draw another line, a support line, right here. You see how it's forming that tight wedge right here? That's a pattern. One second. I need to get my throat. A lot of talking. So this is the important of knowing the patterns. What I did is I went out and I got flashcards. There you go. It's a descending wedge. Yup. I went out and I got flashcards. I went to stockcharts.com. I looked up all the basic charts, wedges, descending wedges, ascending wedges, triangles, U-shapes, head and shoulders, double tops, and I drew those patterns on every single flashcard, and I wrote the definition for every single one. And then every day I woke up, I just quickly ran through them. And then before I went to bed, I quickly ran through them again. Doing little stuff like that makes a big difference. You got to train your brain and stick those in your brain to permanently, you'll remember them the more you do it. And then they'll never leave your brain. You got to trick your brain into remembering stuff. That's why playing word games, like good brain games, like classic games like Pac-Man, Tetris, what else is there? You know, really good strategic games to power your brain and get it stronger so you can start using it more and eating right. You know, it's really crazy how the stock market changes your life, and you really learn a lot about yourself when you become a trader. You know, you got to handle your emotions. You got to think about psychology. You can't have any stress. You got to be stress free. You know, if you have a girlfriend on your butt, you're having a hard time at your job, you know, all that stress is going to be affecting your trading. But this, going back to the pattern here, this is the power of the patterns. And this is psychology. A lot of traders are looking for these. A lot of professional traders. And you want to be looking at what they're looking at and doing technical analysis. So, and this is easy. You just connect the declining highs and you connect the support right here every time it hit bottom. And you just wait for it. And what happened? It broke out. And look at right here when I zoom in. Most of the time when it breaks out of the pattern, if you missed it, it'll come back and test that resistance line at the pattern and hold as support. And if it holds as support, it's good to go. And look at that. It just took off, going from $1.50 up to a high of $2.67. And this is the 65-minute chart. All right. Now let's look at it in the 15-minute chart. You can see it again, but it's a little longer, ain't it? Now if I draw the lines again, you see that? And that's the power of looking at multiple time frames. You see the bigger picture, and then you start to zoom in and put it together. The 65-minute, 15-minute, a little longer. Now let's go to the 5-minute. And once again, you could see it's even longer. So it's, when you break it down, it's pretty simple. Am I right? Always look at the bigger time frame and work your way in. When you're trading on the 3-minute, you're going to be zoomed in like this. You're not really going to see what's actually happening with the bigger picture. You got two great patterns. You got a descending wedge and you got a head and shoulders right there. So this is the 5-minute, and with that pattern, even longer. Snap. There. So going back, 65-minute, you see it real short. Then the 15-minute longer. Then the 5-minute, it's even longer. And then the 3-minute. On the 3-minute, you can't even see it, can you? And then you got the 1-minute. And on the 1-minute, you can't even see it. If you look on the 1-minute, you see a lot of dojis. You don't even see volume in this stock. So that's the power of looking at multiple time frames and how it could help you. And if you read the book, Steve Neeson, Japanese Candle Techniques, Beyond Candlesticks, the second one, he teaches you about the gaps acting as support and resistance. So as this, and how stocks love to fill gaps. So as the stock would move up here, you got this big gap it's filling right here. And when it comes up to this gap, this 325 area is going to act as resistance. And then if it does break over this resistance, once resistance should act as support. And this is just a great example right here, GEMP. And this is what you do every single weekend, every day. You break these stocks down. Basic technical analysis. And you got to have a passion for charts and doing this. You really do, to be good at it. I have a passion for looking at charts. Every chart has a story. And it's up to you to decrypt the story that the chart is telling you. Enough with that. Let's go to trade ideas. Let me pull up the biggest percentage gainers. Is there any stocks that anybody wants me to go over? I'll go over it for you. So we got GEDO and NVUS that were the top gainers on Friday here on the scan. NVUS. I'm not even liking it. On the 1-minute, yeah, you can see right here. I was looking at this earlier. It had a good morning opportunity on it. So this gapped up, probably with news. I'm not sure because I wasn't in the market on Friday. But let's break this down real quick to show you an opportunity. So the stock gaps up from $4 up to a high of $6. $2 range right here. NVUS has a float of 9 million. Now, Tatosky, do you follow what stock's float is? Do you even know what a float is? Float is very, very important. The lower the float, the bigger the rip, the more volatile it could be if volume is in it. The higher the float, the more volume it's going to take for the stock to really move. So, for example, you got Facebook, a blue chip stock. Facebook's float is probably outrageous. Let's see. Okay, 50 million and below is your range. That's good. I shoot for 20 million. 20 million and below. But lately, what we've been seeing are a lot of higher float stocks have good rips. We have GERN, ATUS, not ATUS, ATAI, I believe. But that's another thing. You'll notice trends that start to happen. The past few weeks, 3 weeks, we had pot stocks taking off, higher float stocks taking off. So Facebook has a float of 2.3 billion. So it's going to take there. You can't manipulate that. You can't. And it's going to take a lot for that stock to move. Now a stock like, let's see, a stock like Cool, that's a medium float. I'm trying to think of a low float. SEII. SEII is a low float. That will have a huge rip. But going back to this. So as soon as the market opens, you see it's trending down right here. Okay? And as soon as the market opens, it starts to rip up from 480 up to a high of 525. That's a 45 cents range right there it just gave you. So let me put a resistance on that. And that's what I look for. I look for a stock that's volatile and it has a range. And this just gave an example right out the morning right here. It's got a 40-cent range and a good rip. Opens here at 475. That's why I like to try, if I can, plot the open on my charts. Like this purple line is the previous day's close. So it opens here at 475. Let's see. All right. Opens at 475, rips up, then it pulls back. And if you could see, it's got a higher low that it's starting to form here. Even here and then here. And it pops up to this 525, so this is acting as resistance. You can see these wicks right here. It's popped up to 425 here and here and here. So I'm going to put a resistance. Let me remove this one. So I got a resistance right there. And when it comes back down, it's bouncing off this 480 level, comes back up to this 520, 525 resistance. And then when it pulls back again, this is where I would possibly looking for an entry at this 480. It's telling me right here that this is holding as support from here, here, here. And it's doing it here. And then it pops up from 480 up to the resistance at 520. That's a 40 cents bounce right there. Then it quickly pulls back and then it shoots up even higher. An extra 30 cents. So from 480 up to a high of 550 just about. That's 70 cents right there. You know, get in here, maybe sell half here, pulls back, sell your rest into this pop. You know, I want a stock to prove to me that it's going to hold support, it's got range, there's volume in it, bada boom, bada bang. But then if you look at it in the 3-minute, it's kind of hard to see that in the 3-minute. That's why the first 15 minutes, I'm looking at the minute chart because the market's going crazy. People are doing buy orders, sell orders, just total chaos. And that's when I use the 1-minute. And then after the first half hour into the market, I switch to the 3-minute for a better outlook. And then towards noon, I'll switch to the 5-minute. Yeah, it just looks ugly. on the 5-minute right at the open here, you can't really get an idea of what this is doing. It's just everywhere, up and down. And even on the 3-minute. The 3-minute though, I'll give it that it made higher lows. Just like that. And then trading on Fridays is tough. I don't like to trade on Fridays. Press releases don't come out Fridays. Traders like to take Fridays off. Nothing really happens on Fridays. I've lost a lot of money on Fridays, and I learned you don't trade on Fridays. Special things can happen on Fridays. Short squeezes can happen. A lot of crazy stuff can happen. And then Jivo was just a pump and dump. What did it have? It had 2.8 million in volume. And then what I also look for, does the stock have a previous history of spiking? So this is the daily chart. You can see clearly this is a recent supernova stock going from $3.50 to a high of $25 in a couple days. Traders remember stocks that go supernova. It's a low float at around, it's a medium float at 8 million. But right there, quick pump and dump. That's why you don't chase. Let a stock spike, do its thing, let it pull back and consolidate and start to form a pattern that I am familiar with. And then act when that pattern breaks out. Patterns don't always work. But imagine if you would have chased this. A good entry on this would have been the first pullback right here. You know, doing this bull flag. Going from 394 to 430, pulling back to 415, and then shooting up to 450, pulling back, and then making a high at 465. But I don't like to chase plays, especially if you're under the PDT rule. Do I play the pumps on stock reads? It depends. Like, if a stock's a recent spiker or a recent supernova, and I know the stock has attention and volume, then at the morning when it starts ripping and breaking new highs and it's got momentum, yeah, I possibly would try to chase and ride momentum. But you gotta be careful and not get greedy. You can't get greedy with these pump and dumps. What I like to look for with pump and dumps really are, I mean, you just gotta look at charts and you gotta see if, let me pull this over. Why this exploded up, I could tell you right now, all because of this. It got squeezed. You can see that right there. This orange line right here is the 13 EMA. This blue line is the 50-day moving average. This 13 EMA crossed over up above the 50 MA and they exploded this stock up. This is what traders look for. You can see that right there. You see how it got really tight and tight and tight and tight and tight? Stocks with super low floats, with a squeeze with the moving averages, traders love looking for stocks like that. And that's what caused this to pop. You're going to see a lot of these coming up here in the next few months. You got to be careful though. You can't chase. If you chase, you're going to get destroyed. I've chased one time. The first couple months I first started trading, I was following an alert, and I was trading a super low float stock. I remember the ticker. It was AYTU. Let me pull it up. I blew up my whole account chasing it. This thing's done so many reverse splits, it's unreal. It's not even on the chart anymore. But it was a low float. It was in a halt. Not knowing any better, I had my buy order in while it was still halted. And right when the market reopened it, it filled me at the tippy top. And then it came crashing down $1 like that. And I blew up my whole account. And you'll learn. I'm not afraid to admit it. I've made mistakes. And that's why I do this, to try to show you guys, learn from my mistakes. And that's why I say you'll learn from your mistakes. You definitely will. And your mistakes can be one of the greatest learning tools. And that's why I say it's not good to chase. Let these stocks spike. If they're strong, they'll pull back, consolidate, form a pattern, and break out again. You don't want to. I know the first instinct when a stock's breaking out and hit new highs, your first instinct is to buy. You always buy at the top. You have to train yourself and learn. No, wait for it to pull back. Let that stock prove to you that it's a strong stock and it's looking to make its next leg up. Let it pull back, and then that's when the patterns come into mind. Remembering all those patterns. Connecting the dots, connecting the higher lows. And then once the pattern breaks out, that's when you execute and get in. SSKN. This was a good one I wanted to talk about. Yeah. And this goes back to earlier when I said sometimes news can take time. It takes time for news to spread. So I like keeping an eye on earnings winners. And you can see SSKN, it has a float of 4.7 million. It released earnings right here, August 13th of 9 cents a share. So it's an earnings winner. And it took a month for it to climb up, consolidate, and now it's looking again to break out. And if you go back and look, it has earnings here. And when it released earnings, it sold off, it consolidated, and then it started to move back up. It released earnings here, it started to make a U shape and move up. So this thing loves moving off of earnings. You can see right here when it released earnings at $1.90, crossed over this moving average here. From $1.90, took 1, 2, 3, 4, 5, 6 days to go up from $1.90 to $2.78. Then it consolidated, and now it's starting to U-shape back on up, and looks like it's starting to break out again. So Monday, I'll be looking for this to test $3. It is a little bit overextended, but it's looking good. And you can see right here, this resistance, all right here. But then above that, pretty much it ain't got resistance till 450. 350, 450. Let me see, I'll put a resistance there. Let's see what it is on the weekly. See, on the weekly, the 200-day moving average is at $4. And you can see right there, it's right at this resistance. So I'd be looking for it to test this resistance and break above $3. It's a low float. If it gets volume, it could get going. And then let's look at the monthly. The monthly, the 50-day moving average is at 425. That's a ways up though. But it's looking good. Look at that monthly. That's an ugly looking monthly chart. Every single candle is 1 month. So you can see it's just been declining. Little pop up there. Declining, 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 declining. Then it starts to base out right there. And now it's trending up. And it could possibly keep trending up to this 50-day moving average here at 425. The power of looking at multiple time frames. This is why I could say you could predict moves. You really can. If you break down the technicals and look at multiple time frames, you can do it. So SSKN is on my watch list for sure for next week. And Friday, it had volume of 847,000. And if you look at the volume, I always try to compare the volume with the price action too. On the daily, and let's look at the hourly. Yeah, momentum could come into this. So sometimes it just takes a moment for, either news to kick in or earnings to kick in. It really does. It takes time for news to spread. And why do I only have the 50-day, the 200-day moving averages? Why don't I use the 100-day moving average or the 150-day moving average or the 25 moving average? Because these are the basic moving averages that every trader uses. If you go to FinViz, stockcharts.com, and you pull up the charts, what are the basic moving averages that are on every chart? The 50 and the 200-day. So I want to use what every other trader is looking at. I don't use the MACD. I don't use the RSI. I can clearly see on the daily if it's oversold or overbought. I don't need a lagging indicator to tell me. And all those extra indicators, it's just extra nonsense. And that's why you hear a lot of people, a lot of traders say a lot of these new traders, they just overcomplicate things. They're using the RSI, the MACD, Fibonacci. And it's like, geez. Just follow price action and volume. You'll be all right. Bada boom, bada bang. Is there any charts anybody wants me to go over? Just comment it. Not too much was going on last week. It was like literally Tuesday, Wednesday, Thursday, Friday were all red days. I took one trade. One trade on Wednesday, and I lost. I lost 183 bucks. Let me see. Was it this? No, it wasn't this. That's the one. I traded SBOT. Right here on this day. You can see where it's at now. But SBOT, let's look at the daily real quick. You can see it likes to spike. It's spiking up. But then it quickly gives all of its gains back. It's an ugly, ugly chart. If you look at it and pull it back, it's just been declining forever. And you could see a couple big pops here with big spikes going from $2 to $3.35. A low float. I was just looking to take advantage of its low float. It was up pre-market. As you can see, it had activity. So it popped up and then it declined down. And then right at the open, it goes from $1.50, spikes to a high of $1.80. I'm like, all right, this is a low float. It likes to pop. Let's see what this has. It had over 1 million in volume so far. So I was thinking volume was going to come into this. Traders love to trade. And it was forming a great pattern. I mean, but I just messed up and got in before the pattern broke out. You can see it right there. Just like that. So it's coming up, coming down, getting tighter and tighter and tighter. And I got in on this before the pattern broke out. And you can see right here, it broke the pattern. And it didn't break out. I was looking for it to come up and break out of this pattern, test $2, volume to come into it, and volume just never came into this. And that's a great example right here. Don't try to predict what's going to happen. Just wait. You know, connect the lines, let the pattern form out, and then act when the pattern breaks out. And the pattern broke right here, and you could perfect example that traders use this that follow patterns. As soon as it broke this pattern, look at that price drop. That big, huge price. That's panic right there. Everybody's selling. Get me out. And then you can see it just died off. And if you look at this on the 5-minute, I think it was. No, the 3-minute. Yeah, it was the 5-minute. I'm sorry. This gives a good example on the 5-minute. I'm just trying to get used to this platform still. But you could see a different pattern on the 5-minute. You can see the higher lows, and it's just hitting resistance up here, right here. Boom. You see that? That's a bearish pattern. It didn't even complete. And it dropped out. And then you can see right here when it came back up, that's still holding as a resistance. $1.50 to $1.71. So let's go back. I'll go back to Thursday. Let's look at ABAC. All right. Wow, that's just a real quick pump and dump. Let's go the 1 minute. Right at the open too. This probably suckered in so many traders, and a lot of traders chased this and lost money. Look at that. ABAC, the float's 7 million. Yeah, look at that. Going from $1.90 to a high of 320. Wow. Let's see the volume. 45,000, 171,000, 124,000, 300,000, 99,000. Wow. Imagine getting it at the top. 320 crashes down on you to 250. That's a 70-cent drop. 1,000 shares, that's 700 bucks. That's why it's not good to chase. Now you could see this VWAP right here was acting as resistance. So as soon as it dropped, and then it started establishing higher lows, but then it just fizzled out. Let's see. First it was probably like this. And then it turned into this. Wow. Yeah, and look at the daily chart. You could see people just love pumping it and dumping it. See all those big wicks here, here, here. This thing's crazy. It's everywhere. It's telling me this stock doesn't know where it wants to go. Yeah, this is just an ugly chart. Alright, there was one more on there. SLS. I'm not really digging the daily chart. You can see the daily chart. Look at that. That's disgusting looking. I mean, back here, from here back, it was looking pretty good. But whatever happened right here just completely killed it and destroyed it. Wow, going from $50, and then over the span of the next few months, goes all the way down to 26 cents. And then it gaps up to 7.80 and then drops back down to 86 cents. What a dump. You can see it slowly started trending up here from 83 cents to $1.30. This stock doesn't interest me at all. Look at that sharp decline here too on the 50-day. It's going to come right up to that, probably hit it, fall right back down. When I see a lot of big drops on charts, either they're doing offerings or they're just releasing horrible, horrible news. And that's when you start to do research and you look this ticker up on Yahoo Finance and Market Edge and just starting to see what's going on with it. You know, and if you're a shorter, you can take advantage of this. Yeah, this isn't a chart I would play. That's just ugly looking. And that's why I don't, no offense to anybody who's a swing trader in here, this is why I don't swing penny stocks. Because they're crap. They're pieces of crap. They're either heading out the door or they're just starting. And a lot of companies that are just starting don't make it. And whenever they have a spike up in price, that company's trying to grow. So they'll come out with a public offering, take the profits, and if you're holding overnight, you're screwed. They love doing public offerings right at market close, or they'll do it the next day, like literally at like 7 o'clock, 8 o'clock. Public offering, and the stock will just tumble $1, $1.50. I see it happen all the time. That's why I love just playing the move, the current move that's happening. I want to take advantage of the price action. Just ride the wave, man. Be a surfer. Chill out and ride the wave. WSCI. Ugly. Look at that. Gaps up and goes sideways. MTSL. A lot of traders remember MTSL. And this goes back to me referring to when a stock spikes, traders remember it. But look what it did right here. Back that few days ago. You had a quick morning spike and then it dumped. Gaps up, goes from $1.90 up to $2.44. Market opens and just dies off. And then look at the daily. Look at all those long wicks. So you know this is a lot of people just love playing the move on this. It spikes up, it quickly falls back down. So you gotta be quick, just quick in and out. Take advantage of the move. FAMI. I've been hearing a lot of people talk about, what was it? That pot stock. What's the name of it? Chronic? C-R-O-N? Let's look at Chronic. See, look at the moves on Chronic. Let's go to the 65-minute. You can see it was in this area, and then from 580, it just exploded, going up to a high of 1290, 1350. But very, very choppy. Very choppy. And that's the thing, too. You got to look at the volume. And you got to tell yourself, okay, if it's got 13 million, 15 million in volume, I don't even want to touch it. It's overcrowded. Okay? When a stock's overcrowded with volume, you're going to have a lot of resistance because there's going to be a lot of traders in it that are buying and selling everywhere. And that's the last thing I want to get into is a stock that's overcrowded. I want to be in early. I want to try to get in when the stock's breaking above 200,000 and getting momentum up to 1 million, 2 million in volume. Anything above 4 or 5 million, maybe I'll play it. But above 5 million and it's a low float, forget about it. It's just going to be too choppy. And let's look at the volume. The volume days it had right here. I didn't even follow Cron. All this time, I didn't even pay attention to it. I didn't even look at it. But from the choppiness of this, I'm guessing the volume's high. Let's just see. Actually, real quick, let's see what the float is on Cron. Okay, the float's 150 million, but the sector was on fire. The pot sector, whenever a sector gets momentum, float is like really irrelevant. You know, if a sector gets momentum, it's gonna go. But let's just see the volume here. We'll start right here. 24 million in volume. 30 million. 83 million in volume. Wow. 45 million. 43 million. 81 million. 41 million. 43 million. 67 million. 36 million. 13 million. 14. 31 million. 13 million. Wow, 3 million. So see what I'm saying? Getting in early when the volume's just starting to heat up, 3 million, and then it just got out crazy outrageous. And look at all these huge gap ups. That's when getting in with the early volume and the momentum, and it just exploded with that huge volume. And then you just get piled even more and more and more volume, and it just got really, really choppy. And then when it started to move back up, that's choppiness right there. Because it's just overcrowded. You know, you got to think when it's starting to gap up and move up right here, you got all these stubborn buyers that are holding on, hoping for it to come back up so they can get out. And when it started to come back up and you're buying in, you know, these guys that have been holding on from here and here, they're unloading on you just to break even. And then you wonder why. Why did I take a loss? Well, it's overextended and you're buying to all the bag holders on this. You got to take all of those into consideration when looking at charts. And I know it's hard to do all that, you know, when the market's going on real time. And that's the importance of going over and actually sitting and thinking and looking at these charts and breaking them down. Breaking down all the possible aspects of what's going on. There are a lot of traders out there that love to hold and hope. You know, buying in right here at the very top. 1280. Then it crashes down to, oh my goodness, 875, and they're still holding, hoping it comes up. And then when it comes up, they're like, yeah, get out of here. I'm breaking even. 90% of traders fail. Okay? Be that smart 10%. Discipline and patience. I say at the end of every single one of my videos. Patience and discipline. Wait for your setup. Wait. You don't have to trade every single day. I look at it as I want to be profitable every week and I want to be profitable every month. Even if that means I only trade one time that whole week, if I was profitable, good. If markets ain't in my favor, like all this week, the markets were down. They were red. I can't force anything. Because if you fight the market, every single time you're going to fail. You can't fight the market. You want to work with the market. And going back to the market right here, this is the SPY and the NASDAQ. You can see all this week it just pulled back. So this upcoming week, I'm looking for this upcoming week to be good and strong. You know, because it's going to start rebounding back up. The SPY could keep dropping. But I feel like this chart pattern, good setup, even with this doji here, it's bouncing off the 50-day. It's going to have a good bounce up. So I'm excited to see what Monday will bring. Always try to have your, this is what I have. I'll show you. Every day when the market's going, I have a new high versus new low. So it tells me the percentage. How many stocks are breaking out to new highs? How many stocks are breaking new lows? How many stocks are red? How many stocks are green on the day? And it has a little chart up here, and then this will fluctuate all this week. I seen it at one point. The new highs green was at 35%. And the red one, what was it? 65% red. And then I also have the SPY going. All right. 3 out of 4 stocks follow the overall market. Just 1 second, guys. Is there anything anybody wants me to go over? Any charts? But just prepare yourself, guys. You know, this is the important thing to study over the weekend and try to, you know, take advantage of the time you have and prepare yourself. Because if you're not prepared, you're going to fail every time. You want to be prepared the most. Going back to Cron, you know, analyzing Cron and thinking of all the possible situations that could happen with Cron. You know, we just broke it down. When the market's live and actually going on, it's hard to do that. But I think I've went long enough. Been going for 3 hours, I think. It was fun, guys. I had a good time with you guys. I said I would do this every Saturday at noon, but the thing is, college football just started up, and I didn't actually put that into consideration when I said let's do a live market recap every Saturday at noon. I think I'm going to change it now to Sunday at noon. That seems to fit better. Plus, people are out and about Saturdays, so it's kind of hard. But I'm going to have to change that. But I hope you all had a good time. Hope you guys learned a lot. I love doing this, and I don't mind sharing my opinion on stuff and showing you guys how I look at the market. I hope you guys took something away from this. Make sure you go through that playlist that I just made. I made a couple of them. I'm sure you guys will love it. So that's it for this one, guys. Remember, stay patient, be disciplined, wait for that setup, and you'll be all right. All right? And study, study, study. All right, guys. Later.